Hello and welcome to Donatien Investment. This analysis is for the Charles Schwab on the New York Stock Exchange as of 7th of August 2026 with a share price of $107. The full report is on donatien.ca. Charles Schwab is the largest asset gatherer in America, a broker bank custodying about $13.08 trillion of client assets at quality 80. The medium and long calls are both a buy, fair value on an approximately 20% ROE compounder with record net new assets. The short call is hold only because the price sits at its 52-week high on a low volume breakout. A hold now, accumulate on weakness for the longer term. Charles Schwab is the largest asset gathering franchise in the United States, a broker bank custodying roughly $13 trillion of client assets across about 48 million accounts. It earns three ways: net interest income on client cash swept into its bank, asset management and administration fees, and trading commissions. Record core net new assets of about $120 billion in the second quarter, up 49% year-on-year, show the gathering machine is working. That scale plus a return on equity around 20% is the moat. Business quality is high, at 80. Here is why the longer horizons are a buy. The valuation now sits fair, a warranted ratio of about 0.96, a clean price to earnings of 19.6 on operating earnings with no non-operating markups. Net interest income is normalizing higher as the post-2023 cash sorting drag abates. Revenue hit a record $7.07 billion in the quarter, and the share count is falling about 4.5% a year on buybacks. The base case is $118, about 10% of upside, plus a roughly 1.2% dividend. Valuation scores 67, timing 62. So why only hold for the short term? The stock is at its 52-week high on a low-volume breakout, with the daily relative strength index near 70, overbought. Neither the technical nor catalyst entry group is met, so the short call is a hold. Buy on confirmation, either a volume-backed break of $109 or a pullback into 99 to 101. The dividend is 32 cents a quarter, maintained. The 19% raise was back in January, not this quarter. None of this changes the longer-term thesis. It is a question of entry. Now, the other side of the ledger. Aggressive Fed cuts compress the cash spread. Cash sorting, deposit outflows could return. Market drawdown drags asset-based fees. Bear case approximately $88, about 18% from here. Now weigh the risk against the reward. The bull case is roughly 27% above today, the base case the most likely about 10%, and the bear case a fall of about 18%. So you are risking about 18 to make 27. So, our call on the Charles Schwab on the New York Stock Exchange, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donatien Investment at donatien.ca. The link to the full report is in the notes below. Have a great day.